Hey there, Brian Bogner and Greg Towner with November's edition of the 20-minute market breakdown. Of course, this is our election edition as well, here being a day after Election Tuesday here in November 2022. So we're going to be talking about some stuff concerning, obviously, the election, the markets, and all those types of good things. Normally, we like to open up this podcast with a few personal anecdotes and things like that, but we do have a lot to talk about today. We do think this is important, so we're going to go ahead and get right into it. All right. So, Greg, we had an election yesterday. We still don't know the results of a lot of them. A lot of them are very close, very tight. They're still counting votes. Things are happening there. But this is not a political podcast. We're not talking about that. We really just are trying to determine how, it affects the market and how it affects the economy and our investments and things like that. So what are some of your thoughts on, how do markets typically react after elections, especially after midterm elections?
Yeah, we've looked at a lot of different studies. Of course, everybody's putting out different studies right now, and some of them are pretty interesting, I have to say, particularly as you look at the midterm election, which sometimes people don't pay quite as much attention to. But if you look at the last 70 years, so every time after
Wait,
the midterm,
70? 70.
70, yeah,
70.
70
Okay.
years.
All right. Just want to make sure.
After every one of the midterm elections during that 70 years, the 12 months forward period, the market was always up every single midterm election time. And it was actually up greater than the average for the market. So pretty credible statistics. And along those same lines, we're also now, if you just kind of look at the typical, there's a thing called the presidential cycle as it pertains to investing. When does stocks tend to do well or not so well? We're actually entering right now, have just recently entered, I should say, the best 3-quarter period historically in that presidential cycle for stocks. So, you combine those two. You look at the fact, like you said, we don't know for sure the results yet, but it looks like there's going to be some sort of gridlock occurring. Historically, markets tend to like that. So, there's a few things lining up that, we talk a lot, ignore politics as it relates to investing.
Right.
But we also don't want to ignore some historical data either and say that, maybe there's some positives here, potentially.
Yeah, because I think if you look over the last 70 years, right? There are times when Democrats have taken control, Republicans have taken control, the Congress has been split,
Sure.
divided government. You can probably chalk up all those scenarios. It's not like, well, during this time, like one political party has done that or the other. But
Right.
I think what the market likes is clarity.
Absolutely.
And so when you have clarity and the market knows, okay, it's not that the market is some being. The market is all these buyers and sellers. It's all these buyers and sellers out there that like this clarity of okay, if we just talk about where we're at right now, we are going to likely have some type of gridlock. That means nothing huge is going to be passed down through Congress that would affect things and affect companies, and they have to change their strategy and things like that. So the market tends to like that, right? Managers, CEOs now know what the next 2 years are probably going to look like, and they can start making plans around that.
Yeah, exactly. And, we're also now, aside from, the election side of it, we're also now in the good seasonal period. It's not just, the clarity now, but for probably the next couple of years. Historically, this has been a good period. Some people kind of speculated, well, hey, maybe the president now doesn't have to worry, can start to focus on the next election. So tries to ramp up the economy, that sort of thing. I don't know. That's just kind of speculating, but I think the reality is it's hard to know why stocks have done well in the past after midterm election, but the fact of the matter is it has. But
what could be some headwinds? We know that. We know historically it's there. We gave some reasons, but what could be some headwinds to why that may not happen?
Yeah, of course, there's no guarantee. You said gridlock has historically been a good thing, and it has. But it also might prevent more stimulus from being put out there. That may or may not be good, depending on how you feel about it. But it has the potential to stimulate the economy. That's probably not going to happen. Of course, we still obviously have the Fed. The Fed's still raising rates. That we'll get into that and other things here in a moment. And then probably the big thing that everybody's talking about is if we have gridlock, we're definitely next year going to have the whole debt ceiling thing, and we'll get into that down the road someday to talk more about that. But we encountered the debt ceiling problem back in 2010, 11, that period.
Mm.
It created a lot of volatility for the market.
Mhm.
It's temporary, of course. Looking back, it's just another little blip on the chart.
Mhm.
But I think with the likely gridlock, we could have some infighting over the debt ceiling next year, and see some market volatility around that too.
Yeah. Well, I think it's important that we talk about this because I know that in a lot of my meetings with clients, invariably when we're talking about the economy and markets, usually they will bring up, well, some upcoming election or this government, this, that, or something along those lines.
Yeah,
And I think it's very easy for us to attach because, look, I'm not trying to discount or downplay politics by any means because it is important, right? It does affect our lives. It affects things here in this country.
right.
But I think it is dangerous. Sometimes we do get really caught up. And let's be honest, it's an emotional thing, right? I mean, we're very
Yeah,
passionate about the things that we're supporting. We're very passionate about some of these candidates. And so we then tend to attach that, however, to the economy. And that can be very, very risky, right? We talk a lot about emotions in
right.
investing, and it's no different when it comes to politics. Now, someone might say, well, yeah, but Brian, what the president does and what Congress does and the policy they pass out and things like that
Mm,
and stuff like that.
right.
Yes, it is absolutely important. But a lot of times it's not as important. I know it sounds crazy as a lot of other things that are going on. And so I hear from clients all the time where they'll say, well, that sounds like a great idea, or let's do this or that, but let's wait till after the election till, so we can get some clarity around the election. Well, majority of the time, and we talk about this, the market is usually discounting a lot of this stuff ahead of time, before that even comes through. So, you know,
Yeah.
again, politics is emotion, a lot of emotions, but attaching that to the economy can be dangerous. What are your thoughts?
Yeah, just in the last two presidential elections, of course, we heard people from both parties in their
Mhm.
respective times say, "Oh, I want to wait until after the election," and then got themselves caught off guard. In
Right.
both
Right.
elections when Trump won and then when Biden won, the market just ripped higher, and not necessarily because of the president by any
Right.
stretch. And that's kind of the whole point. Is there's
Right.
so many other things happening. But it's just the dangers of focusing on that. And like you said, we talk a lot about emotional side of investing, arguably nothing more emotional than politics. So if you combine that with investing, it's just really dangerous.
Yeah,
In
it's like the
fact,
perfect storm.
it is a perfect storm. In fact, referring back, we've mentioned a couple times the book I wrote, Investment Lessons of 2020. I only covered about a 12-month period in that book, and yet I had three small sections on the politics and elections and how it tied to investing and how it
Mhm.
was just kind of dangerous for a lot of investors. So I think it was a little better this time. I don't know about you, but I didn't hear quite as many people talking about, oh, I got to wait till after the election or that sort of thing. So hopefully we're helping train people. I don't know.
Mhm.
Maybe it was just people were not quite as tuned in via the midterm, but I think maybe people are getting a little bit more aware of the dangers of tying the two.
Well, I think and I'll just speak politically for a second here. I do think that this was just maybe a warm up because I think the next 2 years, I almost
Yeah.
feel like we see the circus and the carnival show called the presidential election, and can it get worse? And
Right.
I think it can. I think it
Yeah.
can. And but I do think the next 2 years there's going to be a lot. I mean, it's going to be a big time uh, circus. But again, you're going to hear us over the next 2 years talk a lot about, um, you know, let's focus on these other things because these
Right.
things are really what's driving the market more than what you're seeing in the news. Remember, headlines, I don't care what they are. Headlines very rarely, news headlines very rarely have the impact that you think that they do in the market. So
Right.
let's talk about what are some things that we really need to be looking at right now, and things that we need to be focused on that's driving the market here.
Yeah, there's a long list of things that are always at least as important and probably more important than who won what election. I mean, of course, everybody right now is talking about the Fed, right? I mean, we know what they're doing right now. They're raising rates, and they're doing that because of inflation. And inflation, we're recording this the day after the election, which is the day before the next CPI number comes out. So by the time everybody listens to this, they'll know the next inflation number. And we've talked a lot about inflation. I mean, it's a lot of indications are that inflation is coming down, but it takes a long time to get into the government data, particularly like rents. Those take a long time. So we're talking about inflation. Interest rates, those are all really tied with inflation and the Fed. That's a big thing. It's just a natural business cycle. I mean, most of that is not affected
Right.
by, the elections or who's in office. That's huge. Geopolitical events that we've seen this year, the dollar, a lot of people know outside of the industry don't talk about the dollar, but it's hugely important in a lot of different ways. So you go on and on, but so many things that we're watching now, but also just from a broader perspective, we think people should, care more about than from an investing standpoint, care more about than elections.
Yeah, there's a lot of predictions that have been that we're going to see a recession sometime next year. Okay.
Right.
And we very well may. How that relates to the market, when the market discounts in, how the Fed reacts to it, things like that. I mean, it was interesting that I forget what it was the other day, but some numbers, or maybe it was some number came in, and it meant that, and the market, it was actually a positive number, but the market went down
Right.
because, or as an economic positive number, but the market actually went down
Right.
because that meant the Fed was going to keep raising rates.
Right. Right. Well,
So
think
you had
about it right
you got a
now.
positive economic number. The market tanks. Why? Because the Fed is likely going to keep raising rates because they don't need to slow down
Yeah.
because there was some positive, yeah.
I mean, think about it right now. The market or the Fed really, I mean, they won't admit this, but essentially they are rooting for more people to lose jobs because that means that, the economy will probably slow. Less people have jobs, the less they're going to spend, et cetera. And, all about inflation. So yeah, in this whole, crazy world of economics in a market, good news is bad news is good,
Right.
for at least for the moment. Things can go in cycles, of course.
Yeah, and the only layoffs that we've seen up to this point really have been the tech companies and
Yeah.
the stuff that were the big high flyers, over the last few years, especially through COVID. I mean, everyone, right, was staying at home. They were on social media, they were buying stuff, things like that. Those companies are laying off people now because people
Right.
are out and about, they're doing things. I mean, do you think airlines are laying off people, or
No.
anything in the service industry is
Restaurants.
laying off
Right.
anyone? Yeah, no. So it's very selected right now. The layoffs that we're seeing, we're not seeing wholesale layoffs. And I've said this a few times that when we start seeing good old blue chip companies announce layoffs, then that in my opinion, that's a sign of, okay, we're going to see a broad slowdown here.
Yeah. And I think, the market is starting to get a little bit of a better feel for where and when the Fed is going to kind of ease the whole rate increasing. Of course, we still have to monitor the inflation data that will dictate it to a large degree. But they're going to keep raising rates, and they're saying they're going to keep them at a high level probably throughout next year as their objective. But the market's starting to kind of know where that level is roughly. And so there shouldn't, hopefully, knock on wood, be too many more big surprises. So again, back to
Right.
clarity. Market would rather factor in, bad news
Right.
than have the unknown that, out there. So that doesn't mean things can't go down more or what have you, but just bottom line is, the market is starting to factor in things from the Fed, and we'll see as the data comes in here how that changes.
And again, we get so fixated sometimes on specific things and we forget that there's other things taking place. For example, all of this aggressive, raising of interest rates moving higher. Yes, they've had a negative impact on tech companies, obviously a negative impact on real estate. But guess what they've had a positive impact on, that people are starting to talk about, that haven't talked about it in the last 10 to 15 years. It hasn't been on anybody's mind, but now people are starting to talk about it. Come on, Greg.
Bonds.
Bonds, fixed income.
Yeah.
Nobody has wanted to talk about that. And it is, like, well, that asset class is dead. Well, guess what? They're now, bonds and fixed income is now an asset class that is producing returns now that people are waking up to and going, oh, wait a minute, that's not a bad return.
Yeah, no, you're absolutely right. I mean, for years that the savers, the retirees, the savers were just struggling, trying to find any way to get any kind of yield, and now they can get it. If you compare it to inflation, maybe it's not incredible still, but it's a lot better than it had been.
Right.
So it makes for a more balanced market. And we've talked a lot about, we think things are getting back to normal. And it doesn't feel that way. It's a painful road to get there, but things are getting back to a so-called normal from an investing perspective.
Right. For sure. For sure. Well, this is the 20-minute market breakdown, and we've hit the 15-minute market here. So why don't we go ahead and close this out, because we always want to keep these things pretty tight, and don't want to just talk forever. And we do appreciate you listening. But Greg, what do you got for us today?
I have a couple of recommendations actually. First one, not business related, but my wife and I have been enjoying this TV show. The actor Stanley Tucci has this
Mhm.
show called Searching for Italy, and he's Italian. And each episode he goes to one of the, I believe it's 20 different regions in Italy. He's a big foodie, so that the show is largely about food. But as you know, Brian, I'm not the most adventurous of eaters. So some of the crazy foods, some of the crazy foods he eats don't necessarily strike with me. But what I really like about the show is he really digs into the history and uses the food to talk about the cultures of each area. I mean, it's just
Interesting.
amazing how many different regions and how different things are. Of course, the amazing scenery, the old history of Italy, and it's just a really interesting show, whether you're a foodie or not. I would
Yeah,
suggest people check it out. Yeah.
that's great.
Yeah.
Are you going to plan a trip?
Hey, you never know. You never
Yeah.
know. Got to choose which one is one of those 20 regions, though.
Yeah.
I do have a market related suggestion recommendation, though. We've been talking for a good part of this year that this is a bear market we're in,
Mhm.
however you want to define that. And I
Mhm.
think people have gotten used to over recent years just kind of the quick dips of the market and then the rally back up, or just in life in general, people aren't too patient anymore, right? Quick
Mhm.
satisfaction of everything, social media world. I just want to encourage investors to remain patient. Bear markets often take a good bit of time. And sometimes they test emotions for investors in both directions. Like, oh, okay, things are rallying now, we're good. And then they fall back. There's lots of starts and stops in bear markets. It takes a lot of time to get through it. No one knows when or how much pain we'll incur. We may have already had the bottoms, we don't know, but we just think it takes time, and it creates opportunities though. I mean, think about people, you can't pick the bottom, but if you dollar
Right.
cost average, even if
Right.
the bottom takes a long time to get in, gives you a longer time period to dollar
Right.
cost average. It's actually, it's not easy to think about, but it's actually a good thing. So just be patient, and things will ultimately get out on the other side. When you look back at the world events over the last, many, many decades, they're all little blips on a long-term rising chart. They don't feel like it at the time. They feel
Right.
painful. But in hindsight, just, oh yeah, what was that we were worried about? So
The thing just along those lines, I always try to tell myself is, if it feels uh when you're buying, then it's probably a good time to buy. Like if it
yeah.
feels pain, it just feels not, and there's a lot of red or whatever, then that's probably a good time to just put, I'm not saying put everything in, but that's probably a little
Right,
time to
right.
just put a little
Yeah.
bit in there. Well, I got a couple things. Well, since you mentioned a show, I'll mention a couple shows as
Yeah.
well that I'm just crazy about. For those that know me, I'm a sci-fi nerd. I love all kinds of science fiction. And there's two really, really, really good shows out right now. One is on Apple TV. It's got a little bit of sci-fi kind of, actually, it's really not sci-fi. Could maybe happen. I don't know. But it's called Severance. It's like a thriller drama.
Mm.
There's very few shows that I have watched recently that I just get hooked on. And I'm
Okay.
like, oh my goodness, get to the next level, get to the next episode, this and that. That's been a really good one. And then, I know, I'm sure there's a lot of Star Wars fans on here, but this new series that they've put out called Andor, I just think it is so well acted, written,
Mm.
directed, all of the
Okay.
above. I just have enjoyed it immensely, because I know that, Star Wars has not been putting out a lot of good stuff lately, quite honestly. But this one is really, really good if you do like it. And then as for last thing here, I mentioned last episode, as we get into this holiday season, there's a lot of great opportunities for your family, kids to serve your community, get with a nonprofit, do something, serve something else. And I still wanted to just emphasize that my son and my kid, especially I'll just talk about my son, but he plays basketball, he's got a lot of sports, things like that. And we just kind of come to realize there's a lot of when you're doing all these activities with your kids, sometimes it's all about them in a lot of ways, and just really teaching them that, hey, yes, we're going to do these things for you, but now how can we also serve some other people as well? And that's really something for Jeannie and I that we've been really talking through, and with him. But the thing this season that's really been on our minds and our hearts is just this idea of gratitude. And that, yes, maybe politically things didn't work out yesterday the way you wanted. Maybe the markets, has negatively impacted you in some ways, but I'm willing to bet there's still some things to be very grateful for and thankful for. And as we get into Thanksgiving and we get into the season here, I would just encourage you to take some time with your family. We do this a lot. We do this every morning when we're driving to school, but we'll sit around the table or whatever, and we'll just go just 3 things you're thankful for. And we just go around and share it. And I know that sounds so simple, but you'd be amazed at just the powerful impact that has, and reminding yourself of that as well. So on that note, we'll go ahead and call it here. Thank you for listening to the election edition of the 20-minute market breakdown, and we will talk to you next month. Have a great day.